Welcome to Bears in Exile. Today is August 16th, and it's time for the market overview. We have a lot to go over tonight. Hopefully I can get it all in one video, and I'm just going to jump right into it. Here we are with the Dow. We have a hammer, or hanging man, whichever you want to call it, and it is not clear at the moment, whether this would be the top of a range or if this is a bullish signal, whereas, sellers came in today and were pushed back. You'll notice that we have further crossover on the short-term moving averages, which is great, and the middle Bollinger Band line is piercing the short-term moving averages. If it can get to the bottom of the short-term moving averages, it will provide lift, and we can go up for a bar test. You'll notice that the bearish bar is getting separation, and to go up for a bar test at this moment would be 11,800. Beyond that, the daily looks really nice to me. CCI is ticking up, stochastic is high, and the 14-day RSI moving average is in oversold zone. So if that were to hook and turn up, that would be very, very positive. Of course, we're probably already going to be underway for a bar rate test before that happens, should this thing going to be turning up. RSI ticking up, MACD histogram ticking up. We're very close to that bullish crossover of the MACD. But it should be said that we are at a very critical juncture right now. We are just a breath away from our bubble fix target for the short-term moving averages. It is at that point where it will decide whether it wants to go up for a bar retest, or if it stalls out right here and fails and then craps out. And either one is possible. Now the daily looks really nice, and I need to point out that on the 60-minute we do have some problems. We have a possible divergence in CCI, in the stochastic, in the RSI, and in the MACD histogram, with a bearish cross on MACD. Now this is a faster time frame. This is the 60-minute. So I mean, these can move intraday and go from overbought to oversold and just go all over the place. But it does insinuate that in the immediate future, we do have some work cut out for us if the bullish move is to continue. But after the 60-minute, you have the 30-minute, and the 30-minute looks much greater. And actually the 60-minute doesn't look that bad either when you consider guppy. This is going to apply to the SPX as well as the Dow, but this is normal. You're below the bearish bar. It's going on its way. Eventually it decides to change direction. You get crossover, full crossover, and separation prior to entering the bar, which increases the odds greatly that you're going to put the hurt on the bar, which it did. Once you are through the bar, it is healthy to go back for a retest of the bar and bounce off of it. You can see that we achieved the complete crossover and separation, put the hurt on the bar, exited the bar, came in for a test as the bar is collapsing, and now we are waiting to see if it bounces off or it fails. So this is the 60-minute time frame. And when you come out of the bar, you normally have a bit of a mess in the secondaries, and that's what the retest of the bar and the bounce off fixes. So we have a bit of a mess in the secondaries. It is doing the retest, and we're waiting to see if it bounces off. Note that it can go in either way at this juncture. Just to put more perspective in this, we're going to go to black box number 2, and you can see that we exited the minor and the major trends a couple days ago. We have now exited the minor and the major trends on the upside. So if this were to fail, if this were to break down, we would be looking at just a little bit north of 10,600 for a move down. And if this is strong, it will push up and change the direction of the minor and the major trends. we look at black box number 1, we can see that we have the minor, the major, which it has shifted already, and the extreme. Well, we left all of them a few days ago. We came back through, got through the minor trend, are on the way to the major trend, and that is not too far away from a bar retest. So these are adaptive moving averages, and if we get that move, these are going to shift again. But once again, that 10 to 600, that in a day or two, the extreme and the minor trend will be down there. So we can expect that if this were to fail, that's where it's going to be going. Conversely, if it keeps going, we know that 11,600 is completely achievable, and beyond that, if we were to pierce this, it is going to shift all of these envelopes that we're currently trying to work our way through. And going to SPX for just a second, we've been saying for days that 12,200 is the place to be to start with. That is where our uptick target hits, and we'd also kicked around 12,600, 1250, I'm sorry, 1260, 1250, and now actually a bar retest is just above 1240 because it is sloping down. If we're able to go higher, the middle Bollinger Band will get below the short-term moving averages, providing lift. And if we look at our black boxes, you can see that the top of the major trend is right here, 12,200. And if we're able to get through that, then these are going to shift. But if it were to fall apart, we're looking at 1,100. So, and black box number 2, the faster one, we left the major and the minor trends a few days ago. We've left on the upside the minor trend, and the major trend is right just below 1220. So once again, correlation. And when it gets to 1220, I'm going to start getting really nervous and be probably getting out and waiting for it to decide what it's going to do next. And obviously, if it turns around here, we have a good ways to go lower. But we have said that over the past few weeks that we were expecting a bounce. The bounce would go up, and whether it would get to the 200 or not, or prior, and 1220 has been the one that we've been saying that it would go up and then most likely fail. So we're getting close to that upward target, and we'll see what happens. The VIX, we have a spinning top. We have more crossover on the short-term moving averages. This does look like it's at the point where it's going to decide whether it wants to go down for a bar retest or not, which completely lines up with a spinning top indecision. CCI ticking down, RSI 14-day moving average very high. If this clicks lower and starts its descent, this sucker is going to go down. Stochastic oversold, RSI high and going sideways. MACD histogram sloping down, MACD itself going down, looking for a bearish cross. This does confirm the Dow and the SPX. We are at the decision point, and it's going to go one way or the other. But based on the daily, it certainly looks like going down is much more likely than going up. So, but that's in the daily time frame, not the faster, shorter ones. XOY, same thing, exactly the same thing as everything else. So when oil is bullish, the market is bullish. We have a hammery looking structure. It is not a perfect hammer, and we're going to see. TNA, spinning top. Now this one is not as healthy, unfortunately, as the Dow and the SPX, candle-wise and short-term moving average-wise. This has actually provided a downtick. The other ones we're still sloping up, so this one is in more danger than the Dow and the SPX, but it moves a lot faster too. All the secondaries essentially the same, with the exception of the stochastic, which is at the overbought area but not quite, and we have a slight downtick in CCI. UUP, look how low it is, and it is a spinning top. It's close to the lower Bollinger Band. CCI very low, ticking up. Stochastic has room to move, ticking down. 14-day RSI moving average ticking down. RSI getting to 50 and going through it. We're getting the bearish cross on the MACD histogram ticking down. So according to the daily, the dollar is not doing well. If we look at the short-term moving averages, we were saying how it was hanging out below the bar, and then yesterday how it was breaking away from it, going down. We have a continuation of that today, and so that does say that some downside movement is more likely. Notice the middle Bollinger Band line is now getting to the top of the short-term moving averages, and once it is completely outside of that, it will lend more strength to the down move on the dollar. And a down dollar is good for the markets, so we have that evidence. FXE, we have an inverse hammer, and it has broken away from the flat line. Notice the middle Bollinger Band is completely below the short-term moving averages, which should provide it some strength in going up. CCI ticking down, stochastic still heading up, RSI 14-day moving average ticking up, RSI ticking up, bullish cross on the MACD histogram ticking up, and a bullish euro is good for the markets. GLD, our second VIX, look at that. We have a perfect green candle. The downtick evidently is not working out, and this sucker is headed higher once again. Notice the middle Bollinger Band line below the entire short-term moving average structure, and uptick on CCI, RSI 14-day moving average very high. If this were to turn down, that will be bad. Neutral on stochastic, uptick on RSI itself, very overbought, and neutral tick on the histogram, uptick on the MACD. Very interesting that we have no shadows above or below the candle today, and we have a gap, another gap. So people are worried, and you know, is this a repeat of silver a couple months ago? Maybe it is. Speaking of silver, SLV, another green candle, not as strong as gold. Uptick on CCI, uptick on stochastic, downtick on RSI 14-day moving average, uptick on RSI, uptick on MACD, and the histogram. So, on the daily time frames, it does look like the market should be going up, and you know, tomorrow will be the tell. Tomorrow, if it's green or if it's red, is probably going to determine the short-term move of the market. We are at a critical decision point, and you know, this is very interesting. We do have a mixed bag. People are confused, and that's fine. You know, if we do get the move up, then there's going to be a lot of people that are going to need to cover. Conversely, if it goes down, there's going to be a lot of people that need to sell. So good luck, and tomorrow will be massively interesting. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.